The whole idea behind cryptocurrency was this amazing promise, right? A financial world with no central bank, no big authority, basically run by the people for the people. But here we are in 2026, and it kind of feels like a new set of bosses has quietly taken over. So let's pull back the curtain and really figure out who's pulling the strings in this supposedly decentralized world.
And that really brings us to the main event. Is cryptocurrency truly decentralized? I mean, we hear that word thrown around all the time. It's the big selling point. But is that what's actually happening? It's time to peel back the layers and see where the real power is hiding.
Okay, first up on our list, the regulators. For all the talk about crypto being borderless, governments are now stepping in and drawing some very firm lines in the sand. And right now, in the US, a huge power shift is happening.
So, what's happening is that the regulatory map is literally being redrawn. For a long time, it was a jump ball, but now the SEC is set to only handle crypto that acts like a stock. Think tokenized shares. Meanwhile, the CFTC, well, they've been handed the keys to the kingdom. They now oversee the vast majority of the market, including the big ones like Bitcoin and stablecoins. This isn't a small change. It fundamentally alters who gets to write the rules. But here's the real kicker. The head of the SEC himself, Paul Atkins, basically said these new rules are just temporary, a quick fix. So the game isn't over. In fact, it's just getting started. And when rules are up for grabs like this, it creates a massive opportunity for powerful lobbyists and big institutions to come in and shape the future of finance exactly how they want it.
All right, that leads us perfectly into our second major power center, all that institutional cash. You can forget that old image of crypto just being for hobbyists coding in their basements. The big money, Wall Street money, is officially here, and it is changing absolutely everything.
And this table just says it all, doesn't it? I mean, look at who holds the keys to the Bitcoin vault. Sure, the creator Satoshi is still number one, but look who's right behind. We've got BlackRock, the biggest asset manager on the planet. We've got public companies. And get this, even the US and Chinese governments are some of the biggest holders, mostly from seizing assets. This is not a decentralized list of everyday people. It's a who's who of global power.
And the sheer scale of the money pouring in is just mind-blowing. In just 3 days back in late 2025, spot Bitcoin ETFs saw over $2.5 billion flood in. That's not a trickle, that's a tidal wave of cash. And when that kind of money starts moving, it doesn't just participate in the market, it starts to drive the market. It sets the price.
So, you might be asking what makes these giant institutions buy or sell. Well, it's the same old story from traditional finance. It all comes down to what the US Federal Reserve does. When they raise interest rates, crypto tends to go down. When they lower them, it tends to go up. Is inflation running hot? Investors pile into Bitcoin like it's digital gold. The supposedly separate world of DeFi is now completely tangled up with decisions made in very centralized, very traditional boardrooms.
So that brings us to our third and final center of power, the gatekeepers. These are the companies that run the actual machinery of the crypto world. We're talking about the miners who process all the transactions and the exchanges where we all go to trade.
Now this chart reveals a pretty startling fact. Hash rate is just a fancy word for the computing power that keeps the Bitcoin network secure. And that power is way more concentrated than you think. Just two groups, Foundry in the US and Antpool, control over half of the entire network's processing power. For a system that's supposed to be decentralized, that is a huge red flag. And here's why that really matters.
It matters because it opens the door to something called a 51% attack. Think about it. If one group controls more than half the network, they could, in theory, cause chaos. They could block legitimate transactions. They could even reverse payments that have already been made. Imagine you get paid, and then an hour later, that money just vanishes from your wallet. Now, these two pools are competitors, but the fact that this much power is in so few hands, it really cuts to the core of Bitcoin's whole security model.
And of course, we have the exchanges. For pretty much everyone, they're the front door to the crypto market. And while there are hundreds of them out there, the reality is that a tiny handful control almost all the trading, all the volume, and all the liquidity. They're not just marketplaces, they're the gatekeepers.
So how does an exchange like Binance get so powerful? Well, it's this brilliant, self-reinforcing cycle called the liquidity flywheel. First, you build a ton of liquidity, which just means it's easy to make big trades without crashing the price. That attracts the big-time professional traders. Their presence makes the exchange look stable and reliable, which brings in millions of regular users. And all those new users, they add even more liquidity, which starts the whole cycle over again.
It's a powerful loop that centralizes enormous market power in one place, giving them the ultimate say on which new crypto projects get listed and which ones fade away.
So let's put all the pieces together. We've got governments drawing the borders, Wall Street steering the massive flow of capital, and a small number of companies literally controlling the plumbing of the whole system. This isn't a theory. This is the new reality of crypto.
And that brings us to the core paradox. The underlying technology, the blockchain protocol itself, yeah, that's still decentralized. It's a beautiful piece of code. But the human ecosystem we've built on top of it, the money, the companies, the rules, that has become a tangled web of very concentrated power.
So, it leaves us with this one massive question for the future. As crypto goes mainstream, as more big money pours in, and as governments finally write the rulebook, can that original, radical vision of a truly decentralized world actually survive its own success? That right there is the big question we'll all be watching.